See, basically, we are looking at a blue ocean kind of a situation where we see a large demand which is not serviced by the regular banks, and that's after 75 years of post-independence. The reality is that a significant part of the markets are still not covered by the banks. People say that that's the subprime market of India, but what we say is that we say it's the unserved market of India. It's not the subprime. They are not bad clients. It's just that they have not been understood by any bank so far, and we have put in our efforts to go and understand them and build a business model on top of that understanding. So we have been pre-COVID, our growth rate used to be 35 to 40% per annum. COVID, of course, that's reduced. It's down to about 17%. But once the COVID lifts and life becomes normal again, we expect to record our more or less a normal rate of 25% is something that we should be able to look at. And how do we plan to do this? How do we plan to achieve that? There are 2-3 things that we should be looking at. One is that we have built a large client base. We have built a good number of branches, we have got a large number of staff, and very critically, we have built up a very large client base. Now, that client base, if you take liabilities, for example, till last year, we had about 1.1 million liability customers. As we speak today, in a 5 months period for the current financial year, that 1.1 million has actually doubled to, not doubled, maybe about 70-80% it's gone up to about 1.8 million. So we are acquiring customers at a very fast pace. The new type of customers. Whereas our existing customers, we are able to offer more and more products and services which engages with them to us on a more closer basis. Now, the going forward story of Equitas, as we see it, as I see it, should be how do we continue to leverage the investment of the past we have made in acquiring so many customers. Just as an example, I have commercial vehicle customers, I have customers who are doing small business loans. Now, they are about 4 lakh clients. Now, we just introduced a used car as a new product, but I'm not going to the market and sourcing new customer for used car. I'm just going to the 4 lakh and saying how many of them want a used car financing. They are a potential customer for used car. And then how do we target the liability customer for a car financing, used car financing? So the one part of our strategy is how do we leverage the existing infrastructure and customer base to give more products and services, and that could fuel our growth. And that's something that is already established, and that's a path we have been doing and will continue to do. And as I said, it's a blue ocean, so we don't expect too much of requirement that we have to grab customers from other banks. We create our own markets. The second thing is the new customers that we are acquiring now. There's a challenge on how do we then use that customer base and what are we going to do with those customers. That's a story that is still evolving and that's still unfolding, and I hope that we have a better answer on that maybe as we go
So, there's a cost of growth, and in your line of business, which is lending, there have been some entities which have paid a very high cost of growth. So, how are you really managing risk? Because other side of growth, the growth coin is risk, collections, all of that. How are you, making them tight and a full grip on your collection? Because they say that lending business is actually not disbursement business, it's actually collection business. So, how's your effectiveness and efficiency over there, and you're making it better? What's your grip there?
So you're absolutely right. Lending business is never about disbursement. It's always about collection. And as the saying goes, if you give a loan to a client, let's say you give a 3-year loan to a client, the last installment that he pays is your profit.
Yes.
Up to that, you are only collecting your principal back. So if he doesn't pay the last one EMI, you have lost your entire profit from the transaction. So collection is definitely the most crucial part of lending. See, in Equitas, our DNA has been always asset quality. Quality first and growth next. So that's the DNA of the bank, and that was the DNA as an NBFC earlier also. So we have a structure where a branch manager is responsible for both lending and collection. So collection is not a separate vertical. We have specialized collections team, but they report into the business team. The business manager is responsible for both. So it is his job to ensure that even at the time of onboarding, he onboards the right profile and right type of customer, because otherwise his life is going to be difficult.
You're holding it accountable to the guy. If you give the loan, you better get it back.
Absolutely. While credit is an independent vertical, but collection and business are merged. And that's proved to be a very useful kind of a structure for us. I mean, the structures may vary from bank to bank, but we have been very comfortable with this structure, and it's proved to be very useful in terms of results in the last so many years. And our NPA has never been a concern for Equitas. Not even once in the last 13, 14 years we have ever had NPA as an issue for the bank. And we moved in when we became a bank. The recognition norm of NPA was to be different. You know, typically as an NBFC you recognize at the end of the month, but as a bank you are required to recognize on a daily basis. We are one of the very few banks which moved into the daily recognition long time back. So our structures are very strong, our governance is very strong. We don't take any kind of a risk, whether it is governance or on credit. And whatever is the most right thing to do is what happens here, even if it means that people are not going to be happy with us, but we still stick to what we think is absolutely good for the bank.
So governance you held in your internal parameters of running the bank as a very top priority. Talk to us about some of the practices, if you can, how you are trying to differentiate your bank with some of the brands which are also operating in the ecosystem. There have been some issues in the ecosystem which have come to fore, because of which small finance bank as a overall has come in the spotlight. For shareholders there have been value destruction, regulators have been completely unsettled and taken by surprise. How are you insulating yourself for any such thing which could cast a shadow on your brand?
Right. I think that's a very valid point, very important point that you are touching upon. There is nothing if governance is not there. There's just nothing left if governance is removed. Governance is the most fundamental, requirement. And in Equitas, right from the beginning, as I mentioned, Equitas, it's a Latin word which means equitable, which means being fair and transparent. So right from day one, we have been drilling this concept of being fair and transparent into the system. And we feel that governance is not something that we just use it as a boardroom discussion. But we believe that governance is our unique differentiator between us and any other player in the market. And that's run right through the system. Even today as a bank, our internal philosophy is, if you are in doubt, the benefit of doubt goes to the regulators and not to the bank.
Excellent. Great. Let's move on to Rohit. Rohit, you look after the retail end of the business. Tell us how observations are on ground right now. How is the visibility from here on? Not immediate near term, but if one were to talk about 12 to 18 months, how is India actually coming back? The real India, they say, is at the bottom of the pyramid. So small, tiny businesses which your team caters to, how are they rebounding back after this horrible, COVID-related impact?
So at Equitas, we started, our business in microfinance, and the microfinance customer is at the bottom of the pyramid. Today, microfinance is only 18% of our book, but the small business loans is 82% of our book. And the reason why this has happened is because we built our business on understanding customer insights. As we came closer and closer to the customer, we understood what his long-term, medium-term needs are, and we built all our products around those needs, and that's how the entire business was built. So since we've been so close to the customer, we could understand that what does the customer need, and during the moratorium, we proactively went out and said, fine, you have a problem, don't pay. Take the moratorium, and that has paid us very well. All those customers came back to us. An important point to note is 90% of our customers are first time borrowers. So we have gone and done real inclusive banking. We've got those customers, we've improved their lives, and because of that, most of our customers are moving from the formal segment to the from the semi-formal segment, informal segment to the semi-formal, and from the semi-formal to the formal. So many of our microfinance customers have taken small business loans. This has helped them to increase their business in the shops. Earlier they were one-time vendors, they've been able to employ more people, they've become entrepreneurs. In the vehicle finance business, he was a truck driver, he was able to buy a vehicle of his own. So 90% of these customers who are first time borrowers is a space that which we own, and this is a humongous, very large space in a country like India, and it only depends how fast and how quickly we're able to cater to this space.